The European Union has moved a step closer to securing a long-term financial lifeline for Ukraine, as leaders seek new ways to sustain Kyiv's war effort amid mounting economic and military pressures, according to reports. On December 12, the European Union reached an agreement to indefinitely freeze Russian central bank reserves held within the bloc, removing the need for repeated political approvals. As a result, Russian state assets worth approximately $245 billion will now remain blocked inside the European Union for the foreseeable future. Previously, the immobilization of these assets required unanimous approval from all 27 EU member states every 6 months, creating ongoing uncertainty. That arrangement left the policy vulnerable to vetoes from Kremlin-friendly governments within the bloc, including Hungary, which had threatened to block renewals. The new decision followed Russia's central bank announcement that it was filing a lawsuit against Euroclear, escalating the legal battle over frozen assets. Euroclear, a Belgian-based central securities depository, currently holds the vast majority of the Russian central bank assets frozen by Western sanctions. In its lawsuit, Russia claims that Euroclear's handling of the assets caused significant financial harm to the central bank's investment and fund management operations. The European Union has been actively pushing for a reparations-backed loan mechanism to support Ukraine, using frozen Russian assets as financial collateral. Under the complex proposal, the EU would borrow funds directly from Euroclear and then extend those resources to Ukraine in the form of a structured loan. This approach would allow Russia to remain the formal legal owner of the frozen assets while preventing Moscow from accessing or benefiting from them, according to reports. Ukraine would only be required to repay the loan if it eventually received war reparations from Russia for the destruction caused by the invasion. Belgium has resisted the plan so far, warning that it could expose the country to lawsuits and retaliation, including the possible seizure of Belgian assets in Russia. Belgian officials argue instead that the European Union should raise funds through conventional borrowing on international capital markets. However, many EU member states remain reluctant to assume additional joint debt, citing domestic political pressures and already high public borrowing levels. European leaders are expected to debate Ukraine's longer-term funding needs for next year 2026 and 2027 at an upcoming EU summit next week. The discussions come amid growing warnings that Ukraine could begin running out of critical defense funding as early as next spring. According to multiple reports, the proposed loan mechanism could cover up to 2/3 of Kyiv's projected financial needs over the next 2 years.